Okay, we are recording with Rajat Soni. How am I saying your name? I screw up everybody's name. So this is not just you. Just so you know, our team laughs at me all the time because I screw up everybody's name. Rajat Soni.
No, that's great. That's great.
It's not fully correct, is it? Say it. You say it one more. Yeah. Oh, is it? Oh, okay.
You're perfect.
Okay. Okay. Awesome.
Yeah, don't worry about it.
So a bunch of our clients started saying your name. I feel like 3 or 4 months ago. They're like, you got to have this guy. He's on Twitter. I think he's an accountant. He might be in trouble. And I'm saying that jokingly, right? But he seems to be talking. He's ranting on real estate and Bitcoin and money and everything. You need to talk to him. And then all of a sudden you said something like, hey, I want to start going on some podcasts. And now our paths have crossed. So I feel honored and grateful to have you on here, Rajat. So thank you for this. And I want to just dive in. For those people who don't know you, who are like new to you, what do you tell people? What is your, what's your background? How did you get to be sitting where you're sitting today? Can you give everyone just a little bit of your background?
Yeah, for sure. So I started off working in finance for about almost 10 years. I was working at, you probably know them, TD Bank. I was working at TD. Sure. I was working at Questrade, CIBC. I worked at the finance firms. I didn't make it too high up in the corporate ladder or anything. I was working as an analyst, but I think I understood enough about.
You were in the belly of the beast. You were in the belly of the beast.
Yeah, exactly. That's exactly it. I was working at TD Asset Management as a fixed income analyst. I was surrounded by yield constantly. I even worked as a realtor at one point. I'm not sure if you know about
Someone mentioned that to me today. Yeah.
Yeah. So
if you're Canadian, listen, if you're in Canada, everybody touches the realtor hat at some point. Okay. That's just how it works,
That's it. That's exactly it. So I think what your clients were talking about when they were referring to me getting in trouble was the CFA Institute actually investigated me for posting about Bitcoin because I was being seemingly too bullish. So I think that's what they were referring to. But I worked in finance for a few years.
Yeah, they said it like jokingly. I think they knew you really weren't in trouble, but like somebody was bothering you.
Oh, no, I really was. Yeah.
Okay, so let's get to that. So walk me through to like, how do you get to this point? Like you were in finance and then like, can you just pull on that thread a little bit more? How do you get into this like Bitcoin world? How does this evolve?
Absolutely. So I did the CFA in 2019. I went from 2017 till 2019. And then the pandemic, the lockdowns happened. And with those, I just had a ton of time to just do whatever I wanted at home. I started going on walks, just like yourself. I actually listened to the Bitcoin Standard, the audiobook. I don't know if it was in 2020 or 2021. I don't remember. But after reading that book, it changed my view of how things should work and what I should be talking about. Because I used to post a lot on social media about stocks and real estate. I switched over to Bitcoin only in 2023 because just going down the rabbit hole is so difficult. I think just reading the Bitcoin Standard isn't enough. You need to keep going. I think the good thing about the Bitcoin Standard is it makes you question things even more. It gives you that basic understanding, but then when you're really paying attention to what he's saying, it makes you think, hey, this is too good to be true. There's no way that this is how this thing works. So I started doing a deeper dive. I think it took me almost 2 years because obviously I was stuck in the finance field. So I was always surrounded by yield. I was always surrounded by dividends. I was always surrounded by all that. And I suddenly realized that, maybe this thing is not a joke. Maybe this thing is something that's going to change the entire world just because it's sound money. It fixes pretty much a lot of the financial problems that we have. Having sound money, having a form of money that actually works, changes pretty much every single aspect of our lives. And I think it goes much deeper than just, being able to save for the long term. I think it goes much, much deeper than that. And I know you're in the real estate business. I actually think Bitcoin fixes real estate. It makes it so that we don't have to take on these massive amounts of debt anymore because people don't need to buy real estate to save. When they stop needing to buy real estate to save, houses become more available to people. People can have the stability that comes with owning a house, and they can build families, and they can be much happier, in my opinion. They don't have to take on these massive amounts of debt. They don't have to. We'll
get better product. We'll also get better product in the real estate market because right now people can build almost anything because the developers know there's an insatiable demand. So just throw up anything you want with no real thought or craft, condos or houses or otherwise. So I think, it fixes the affordability of it and it fixes the actual quality of the product.
Yeah, and I think one of the problems is so what I've seen more recently is real estate developers are actually advertising to investors. They're not even advertising to the end user. They're advertising to the investor because that's where the most money is coming from. They know that investors are going to borrow a ton of money, and all they need to do is they need to make sure that the real estate, the income that they get is great, and they're going to do it. And there's a lot of new real estate investors who just they don't understand the space. I know you've been in it for a while. You know, like cap rates, you know how to do the math and all that. But there are new real estate investors who simply look at the price and they think, oh yeah, this is a great deal. I'm going to get it. This is
It's a
going to go
speculative
up, right?
flip. Yeah.
Yeah, that's exactly it. And it bothers me that a lot of people. Oh no, go ahead. What were you saying?
No, I'm just kind of nodding in agreement to what you're saying, because like if I'm just thinking it to the developer advertising to the investor, it's like that's just another symptom of the destruction of the middle class. Is like there are some new investors, but there's a whole bunch of other people who have assets. Because they have some of those assets that are inflated up in value, they can tap in, grab some of that new value and buy another piece of real estate. And what you're doing in that process is you're rewarding this, asset owner class, killing the middle class, and you're left with like a lower class and an upper class. And Canada, just such a great country. To see that happening here at an accelerated rate is just unfortunate. So it's just yet another symptom of a broken, manipulated money system. But anyway, this is me talking to you. So you keep going. No,
honestly, it goes so deep. Exactly what you're saying. It's a symptom of a manipulated money system. It's a symptom of a system that's completely corrupted. And I mean, in a way, I think governments have kind of colluded with real estate investors, have colluded with banks to make sure that real estate is scarce. It remains scarce with zoning laws. The way that I see it, maybe I'm wrong.
You think it goes that far where they're colluding?
I think so. Maybe I'm wrong here. Maybe I'm just
I think you're just giving them a lot of credit, like to do that. I don't say it's not possible. I just mean that would require some like smarts.
Yeah, that's true. That's
to actually collude. And I just don't even believe the government's capable of that. I think it's just the incentives are so broken that, we get this structural imbalance of a housing shortage that does not need to exist.
But that's what leads to that. That's what leads to that collusion, right? That's what leads to it. Because if I was reading some statistics about how, I know a lot of real estate. There are a lot of real estate investors out there, but Justin Trudeau's cabinet, I don't know if this is accurate anymore, but his cabinet, most people are real estate investors. They're mostly landlords. So of course they're going to work towards a world where real estate remains scarce. They're going to, maybe it's not even intentional. Like you said, you need to be smart to do something like that. But
I think in the cabinet, like if I just think of some of these politicians, sure. Yeah. Like they're probably voting with their incentives. They own real estate. Yeah. So like they're going to lean to vote. I just think it's a much higher thing. Like I think it's the entire banking system. So I think it's more that like the Canadian government clearly is aware through banking lobby of some sort that there's a lot of mortgages coming up for renewal at too high of a rate in 2025 and 2026. Yeah. And magically this year, the Bank of Canada is saying, they raised them so high, they crushed the economy. And now here we go, quarter point cut, and now half point cut. And now we're all expecting in December another half point cut. And to me, that's just... Yes, they're trying to get some economic activity going, which we can talk about central planning, but they're also like, to me, it's like, pretty convenient, like that all these banks have all these mortgages on the books that all need to be renewed over the next few years, and mortgage rates are suddenly coming down. So to me, it's more protecting the banking system than it would be like colluding with the real estate, but it's all so intertwined. It's so intertwined, like it can look either way. So like it's all a mess. So sure, I went on
a complete tangent there, but I mean, essentially, I started getting a lot of comments from people talking about how stocks are not going to make you rich. They're not going to get you to retirement because inflation is much higher than we consider it to be. I used to always be one of those people that thinks that it's 2%, 2.5%, maybe 3% at most. But now I realize it's much, much higher than we think it is because you had Jeff Booth on your podcast. Jeff Booth regularly talks about how the world is supposed to be deflationary. As we get better at making things, this is his idea, his theory. I just studied it. As we get better at making things, prices should be coming down, right? Prices should not be going up. There should be no inflation in prices of food. There should be no inflation in the prices of cars. We get better at making cars over time. prices of cars should be coming down. I think that's the world that we should see. And I think Bitcoin is what really got me to see that. If it weren't for Bitcoin, I wouldn't have even thought of all of that. And I think that's what brings me here. I've been ranting on Twitter for a while about how Bitcoin is going to do this and that. And I genuinely think that, so right now, a house costs something like 7 or 8 Bitcoin in Canada. I think eventually it'll cost under 1 Bitcoin. It'll cost under 0.1 Bitcoin because of the scarcity, because of the economics of Bitcoin versus the economics of housing. Houses can be, I know there is some scarcity in houses, but we can build higher and higher. We can build condos. I know condos aren't the same as single family homes, of course, but if somebody just wants a place to live, then I don't think they care between buying a single family home and a condo if they just need shelter instead of staying on the street. I think that's what's going to really lead to a much lower real estate price in terms of Bitcoin, and I think we're in the midst of that.
Yeah, I can see under less than 1 Bitcoin. Then you said 0.1 Bitcoin, and my mind just went to like, wow, can you imagine?
Yeah.
Like to just have that thought. You know what? You know, you're also blowing me away right now. I know Jeff now, and to hear you articulate his thoughts makes me think how far the world is coming. Because you picked up his book, you thought about his thoughts for quite some time, obviously, by the way you're articulating them right now. And it's like we are all coming to this moment in history together, which is so wild. Like you're coming to that realization as I'm coming to that realization. Jeff came to it in his book, and a bunch of other people listening to this are probably nodding right now who get it and say, yes, this is the way it should be. And it's such a unique point in history where, when you were doing finance, some people already understood dividends and stocks and different yields well before you did or I did or anyone did. But with this new world that we're all entering, everyone is figuring out this together in real time. And you could see it breaking some people's minds. Like they don't want to let their ego go. They don't want to look at this thing, right? But okay, so on that note, before we proceed, I'm just curious, when you read the Bitcoin Standard, do you remember what was it about Bitcoin from that book that made you pause and think maybe there is something here that is real? Like, was it the scarcity of it, or was it the technical architecture of it? Like, was there one thing, or was it just a bunch of stuff? I'm just curious.
I think it was the history. So I think in Safety's book, the first 7 or 8 chapters have nothing to do with Bitcoin. And I think that's what really got me, because before if he hadn't talked about that, I wouldn't have understood. If he just went straight into Bitcoin, Bitcoin's this and that, I would have been like, well, what's the context here? What does this even mean? Because most people have no idea what money is, right? And he did such a great job in that book just explaining what money is and then showing us that Bitcoin is a better solution for money than anything we've ever had in the past. So I think that's what really got me to start thinking about it, start learning about it. I don't think the book on its own would have done the trick. The book is great. I'm not saying that the book isn't great, but it's just that there's so much information out there. There's so many podcasts. I think podcasts are what really pushed me to learning more, to studying more, to go deeper, to figure out all the nuances. Because when you listen to podcasts, you get perspectives from people who you have no clue what their background is, right? Like, let's say for you, for example, you said that you've been doing real estate for 30 years. So you have experience in certain things that I haven't even thought of. You've probably forgotten more about real estate than I know about, right? So when we have a conversation, I can get you to talk about things that I would not even have thought of before, right? And that's just how I see it. So with podcasts, I was probably listening to like 7 or 8 long podcasts a day, and I was just going crazy because it's just the information never ends, and there's always new things that you can learn. I was doing while I was doing real estate, I was doing Uber Eats because I just wanted something else to do. I wanted to drive around. I genuinely like driving around. So at a point, it was also a way to get more Bitcoin. But at a point, I was just listening to Bitcoin podcasts, and I was kind of annoyed when I'd get an order because I'd have to pause my podcast to get the order. So I was getting a little annoyed, but eventually I left Uber. I studied a little bit more on my own. And I think the money, just understanding what money is what really got me thinking and got me to drop everything else, drop stocks, drop real estate, to realize that all of these things are a result of a broken money system. And I think his book really made me question everything. So once I got past that, it was over for everything else.
Yeah, I tell everyone the first 72, I know this by heart. He has a second edition of the book, so it might be changing, but the first 72 pages of that book, which is chapters 1 through 4, don't talk about Bitcoin at all. And we'll give you a better education on the economy and economics than anything ever could in 72 pages. I refer that book out. I'm like, just stop reading at page 72. You don't even have to read any more. Because I think what we've all forgotten is what money is. So when people come to me about yield, I'm like, listen, you get a yield when you take risk. Like if I was to sum up capitalism really quickly, it would be like you save up capital, you form up capital, you provide value somewhere. In return, you get capital, you save up that capital. And then when you have enough capital that you want to do something with, you take a risk with it and you deploy that capital. If you were a good entrepreneur and you risked appropriately, you will get rewarded for your risk and you're going to get some kind of yield. That has been so lost, whereas people just think that should be with everything. But money, in and of itself, money shouldn't need a yield.
Yeah.
Money should just store our purchasing power. It should just hold the value of our time and labor. And that is what it does. And because we haven't had real money for so long in the human consciousness today that exists in this moment in history, people don't seem to have a concept of that. So when they come at you, and I'm sure you get this all the time, like, well, what's the yield? What's the yield of Bitcoin? You're like, well, you don't understand what money, like that just tells me when someone comes at me like that, I just quickly realize, I'm like, oh my gosh, they like don't understand what money is. And I have a little bit of sympathy because I'm like, sure, like they weren't taught that in school. You have to learn it yourself. So you have to have a conversation with the person explaining what money is. And when I went down that path like you, and I'm like, oh my gosh, Bitcoin is the best form of, never mind digital money. It's the best form of money I've ever seen. I think that history has ever seen.
Yeah.
That's when my eyes kind of peeled back and I thought, I need to go down this rabbit hole deeper, just as you did. Yeah. So then you go down this, and in 2023, you decide to go all in. Is that when you start getting on Twitter and kind of talking about it? And is that moment or no?
So I was posting on Twitter before that, but I was posting mostly about stocks and real estate. I was talking about how dividends are great, how you can earn cash flows. I think in 2023, I don't know. Oh, I think what happened was, I think I remember what happened there. So I was watching this podcast from I was watching this video from the Socialist account. I'm not sure if you know about them. Second Thought. So their name is Second Thought, and
okay.
I'm not a socialist by any means, but I just like learning from different perspectives. I think that's really interesting. I think it's interesting to see different perspectives, because that way you know what the true problem is for anything really. But in this podcast, he was talking about. So the title was, "Are landlords really that bad?" He was going to the extreme, but he was saying how landlords are stealing from people, but that's not true. It really got me to think, though.
But I can see where they come. Like I can see where people come to that conclusion. Like I get it.
Right.
Absolutely.
Right. That's exactly what it is. But he was talking about how landlords are holding on to properties that other people need. They're holding on to something. They're holding on to a resource that other people need, and if those people can't pay them for it, then those people go bankrupt, right? If the tenants can't pay for it, they can't afford the rent. They not bankrupt. They go homeless, right? They can't. They have to stay on the streets. They have to find a new way of living. And again, it's almost like, it almost feels like extortion. And I kind of did grasp on that. I did believe that. I do genuinely believe that because of the current financial system, we have to extort other people. Mm-hmm. Even for, let's say, stocks. When you have a company like McDonald's, do you think that they would survive if they had to pay a market wage, if they had to pay a rate that was a higher wage? Somebody has to be able to live.
That offered a less standard of living. Yeah.
Right. You can't, nobody's going to work for them. They're going to go bankrupt. I was reading the stat where in the US, McDonald's and Walmart workers are some of the biggest beneficiaries of SNAP benefits. So SNAP benefits are the food stamps. Mm-hmm. McDonald's and Walmart employees are the biggest benefits of it. And why is that? At the same time, McDonald's and Walmart shareholders, their investors, are some of the richest people in the world. So there has to be some kind of extraction of wealth going on there. There is some kind of extraction of wealth going on there. And I don't think, nobody has been able to convince me that it's otherwise. right? Nobody's been able to tell me that, oh, no, McDonald's is not trying to, they're not extracting wealth from their employees. McDonald's would be able to survive without having, if minimum wage increased to, let's say, $30 an hour, McDonald's would be able to survive. No, they haven't been able to convince me of that. And I genuinely don't think that would happen. If we do move on to something like a Bitcoin standard, I think all these other companies, these massive multinational companies, wouldn't survive, because you can't scale up operations unless you have fake money.
You're saying a lot of interesting things here. So I want to take these in order because it's really good. This is super interesting to me, because on the real estate side, when you bring up that podcast that mentioned that, my counter to that argument would be, okay, I'm a family with that worked hard, was able to save a little money, and I don't have the time to figure out what stock or trust a board of directors. So I do know that my money sitting in a bank account is going to lose purchasing power. Like, I'm consciously aware of that. I might not know how much, but I know that I'm losing. Yeah. So I'm forced to go do something with the money, which, okay, problem. There's the initial problem. Now I look around, I look at a piece of real estate. I'm like, I don't want to become a landlord. We work with a lot of investors. I can tell you, nobody really wants to become a landlord. Like, nobody. Yeah,
they're forced to.
So then for their family, because they're worried about their kids, their retirement, their kids' education, their kids' futures, they're like, oh, okay, I'll go buy this income property. And now they are forced into buying an income property that they didn't want to. Now you create a situation where you have a tenant who believes some of the thoughts that were just articulated right now, who's like, this landlord's an asshole. Yeah. The landlord's thinking, I got to deal with the banks who are putting me over the coals to try to get me to qualify for this thing, because they don't trust me. And I'm forced to do this and become a landlord, even though I don't want to. And so now we've created this this thing in society where, like, no one's really happy. Yeah. The tenant's not really happy. The investor landlord's not really happy. They don't even really want to be there. Yeah. The bank's on top of them for all kinds of reasons. And then the landlord's faced with the bank increasing rates at just at any time the bond market goes crazy or the Bank of Canada decides to turn the knob up, they have to deal with that. Yeah. Tenants upset that they're not getting the maintenance and upgrades that they want on the property. Landlord is saying, well, what do you want me to do? I can't raise rents because of rent controls. So you got all these things that are just like eating at the fabric of society where none of it needs to exist. So you're absolutely like, I'm agreeing with you. And it's just like, when you see both sides of it, nobody wants to be in that position. Either the tenant or the landlord. So anyone who's listening to this who would be thinking from the tenant perspective, please understand many of the mom and pop investors that we deal with, nobody wants to be pushed into this situation. Yeah. It's just that they have to. And then on your McDonald's, I agree with you on your McDonald's statement there, because labor is the one variable in the equation that can be easily toyed with, because you have to pay for I don't even know if McDonald's sells actual potato French fries, but whatever. You actually have to buy the potatoes. You actually have to buy these different things. And maybe you can cut down on the quality of some of these products enough to save on costs, but eventually you can't cut any more. You have to have some kind of patty that resembles beef somewhat. Yeah. So then the only thing left to kind of cut and play around with is the labor component of your costs. Yeah. And then all kinds of games are played with the labor component, just like how cheap can we pay people to try to make this game? Because if they were to pay the true cost of real beef, real potatoes, and real human labor to provide a cost of living, you're right. The price of that would be so high that McDonald's wouldn't be able to be in business. Yeah. Yeah. And to me, the underlying thing, which I'm just talking too much, I apologize, but the underlying thing is the broken monetary structure, because the money itself is broken. It's producing all these things. And then you get politicians who will point to corporate greed. And you're like, I'm not saying some companies aren't doing whatever they're doing in pricing, but I just mean we could fix a lot of that if the money was fixed, because they wouldn't have to be forced to play these games to survive. Yeah. Like, if I just say that, okay, let's not paint the corporate person as evil. Let's just say they're just trying to make a profit for their shareholders and do their fiduciary responsibility. I can see their incentive structure where they're trying to cut and offer lower and lower employment wages because they're trying to make sure this survives. It's just all broken.
And it's not even that they're giving lower wages. They are giving real lower wages, but the person at the bottom, they probably don't even realize how much the value of their wage has decreased. I think that's part of it, right? Most people don't understand anything about money. They haven't put in the time to study it. We learn nothing about money in school. I learned nothing about money in school, right? And it just compounds and compounds, and it gets worse and worse. And I'm by no means saying that landlords are bad people. They're just doing what they need to survive, right? If they didn't have to buy real estate, I'm sure they would be starting businesses. I'm sure that, because if they had, let's say, for example, if you just had money sitting in your bank account and it's just doing nothing, it's just sitting there, you'd probably want to start a business. You'd probably find a problem.
That's capitalism. You're going to take a risk with your capital. And if you don't provide good value to the market, you're going to lose. So you better figure out how to produce good value. Imagine, I talk about this all the time. Imagine all the brains that are here at Rockstar. And I'm not trying to say we're rocket scientists over here, but imagine everybody that is working on what we're working on now was focused on providing some sort of economic value to the community and the society that we're in instead of doing what we're doing.
That's exactly
Wouldn't that be better for all of us? That would be better for all of us.
If you think about it, think about how many smart people are working in finance. Think about how many people have a background in math. They have a background in engineering, but they're working in finance. They're working to generate more money that can just be printed out of thin air. Like when I was working at TD, I was working as a fixed income analyst. We had clients, we had insurance companies, we had all these different companies. What are they called? When you have a university that gets a certain amount of money,
like an endowment.
Endowment. That's it. So we had these companies that were working with us at TD. So they were making like 1% to 2% in interest on their bond portfolio. Let's say 2%, but TD was charging them 0.5% for literally creating the problem, because TD is the one that's creating all this money out of thin air. I'm not saying TD is the problem here, but TD is part of it. They're creating the money out of thin air through mortgages. They're able to just add an entry to their books and create this money out of thin air, give it to the people.
It's a great game. It's a great game.
Right. They're creating the problem, and then they're offering the solution by offering these managed portfolios to their most wealthy investors. But then everybody else gets screwed over and nobody else understands how money works. I think that kind of triggered me to starting to post about finance on social media. Otherwise, I wouldn't have done it, because I feel like the average person, like you guys, you're helping the average person to understand about real estate. That's exactly what I wanted to do. I wanted to help the average person to understand stocks, how to understand real estate, understand bonds, because the average person has no clue what's going on, how they're getting screwed over.
Mm-hmm. It's kind of wild. It's totally like being in the Matrix. Like once you see it, you cannot not see it. It's totally a Matrix moment that you went through. So then when you started posting on Twitter, was it one of the organizations, I guess, because you have your accounting designation now, is that accurate?
I have the CFA, Chartered Financial Analyst.
Okay, CFA. Sorry, CFA. Then that organizational body said what? Like, hey, you need to calm down. Like, what happened? Somebody reported you, I guess, or something. Like, how does this work?
So I made a video just explaining it. If anybody wants to watch it, they can just search CFA came after me or whatever. I'll send it to you and you can look at it.
What's the title of the video?
It's actually really interesting because they said that I'm making claims about Bitcoin that aren't realistic. So I'm regularly saying that Bitcoin's going to 1 million, 10 million.
I can see that. No, yeah.
Right? You've seen that, right? So they're telling me that I'm making these claims that are not real. They said to me, what are the basis of your statements? So it went all the way up. It actually went to the head of enforcement, and they went all the way through. So at the end of it, they basically just said, "Oh, it's okay. Don't worry about it. You're good. Keep going with what you're doing." But that's the thing. I had to kind of convince them. I had to ask them. So one of the questions they asked me was, "What is the basis of your statements?" And I asked them, "Would you ask somebody who's talking about the S&P 500 this exact question? Would you ask them what is the basis of their statement?" If they're saying that the S&P 500 is going to rise by 10% every single year, they don't get asked that question. So why am I getting asked this question when I'm thinking that Bitcoin is going to go to $1 million? And it's very obvious once you've done the research that Bitcoin is going to $1 million, 10 million, $100 million, because the only real factor here is the fact that dollars can be printed out of thin air, and we've seen it happen today in Canadian dollars. In Canadian dollars, Bitcoin hit 100,000 Canadian dollars, and back when the US dollars were at 72,000 last time in March, in Canadian dollars, Bitcoin was at like 96,000, 95,000. So what that means is that even though the US dollar is being devalued, the Canadian dollar is being devalued even more. So for Canadians, this is even more important. Just to understand the basics. If they don't understand the basics, I mean, they're getting even more screwed than Americans.
Yeah. I mean, I'm just laughing at the whole thing. It's funny. We have a $100,000 hat that somebody gave me, BTC 100,000. And today, because it hit 100,000 today, Canadian dollars, a couple of guys in the office have it on. They're kind of running around with it, just laughing. We're That's bit of a ridiculous office. Okay. Like we're having fun. It's a serious stuff, but I won't touch it until US. I'm like, no, I'm not touching that hat until it's US dollars. So I'm holding
that's
up.
Coming. Yeah. And that's coming. No matter what people say, it's coming. It's going to be here. And if you're not ready by then, it's going to be even harder for people to accumulate these Bitcoin. I actually wanted to go back to, we were saying how houses are going to go to 0.1 Bitcoin.
Mm-hmm. Yeah.
I think when you look at it from that perspective, it sounds weird. But when you look at it in terms of Satoshis, a house is going to be 10 million Satoshis, right? It's like if a Satoshi hits $1 Canadian, eventually it will, because that's just how the system works. If it hits $1 Canadian, 10 million Satoshis buys you a house. I think that makes a lot of sense. $10 million for a house.
Okay, so then let me put, when you say it like that, it definitely sounds, I guess I just had never thought, like I just assumed Bitcoin in dollar terms is going higher. I just never associated it with like, where is it exactly going to end up and how much of it would you need to buy like a reasonable property? And when you say it like that, one Bitcoin, like my mind had gotten to there and I casually thought about it multiple times. But when you go to like a fraction of a Bitcoin, a tenth, then it gets kind of rather interesting. Okay, I'm going to put this, I didn't prep you for this, so I think you can handle it though.
Oh, I love this graphic.
I had this up with Larry Lepard on the podcast we released today. And he's writing a book right now. He has this in his book. He told me who created the chart on Twitter or this graphic on Twitter.
It was Jesse Myers, I remember.
Thank you. He corrected me as well. So thank you for sharing that. So this was a Michael Saylor presentation from about 4 or 5 months ago. And I thought this was like something perhaps I could use with people or some of my own friends to articulate where we're headed. So like in this, if you're listening to this, you can't see it, but like bonds are worth globally, there's, the total global asset value is like 900 trillion roughly. No one's going to know exactly. So we're just all ballparking here, but it's 900 trillion denominated in US dollars. Of that, bonds make up 300 trillion, real estate 330 trillion, equities 115, gold 15, and Bitcoin currently 1.2, wherever we are today, 1.23, whatever we're at. And then Michael Saylor did something kind of interesting. He's like, let's just kind of extrapolate forward 20 years. And he assigned different average rates of return. So not like a compound annual growth rate, but like an average rate of return to these different asset classes. And he came up with the chart at the end of 20 years. And I thought this was such a great illustration of the opportunity because Bitcoin goes from 1 trillion on this graphic to 280 trillion in 20 years. And real estate does about a 4x. Equities do in this example, equities do about a 7x or so, 7x, 8x or so. Bonds only do about just over two times. So everything goes up on the graphic in dollar terms because as we're just talking about, Rajat, like the dollars are printed, so they're worth less. So everything in nominal terms goes higher on this chart. But when you stare at this thing, and gold goes to 45, but then when you see Bitcoin going from 1 to 280, like to me, that's like a jaw-dropping illustration. So like when I share this to you, I feel like you're in total agreement. Is this low to you, high to you? Like when you look at this, I don't know, what comes to mind? What do you say?
I mean, the way that I see it, I don't see a reason for people to hold bonds anymore. I don't know. Maybe I'm being too crazy here, but I don't see a reason for insurance companies to hold on to bonds. They have long-term claims. Let's say you have a 30-year time horizon. Why would you hold bonds?
And the reason for that you're just saying is because if you buy something that when you're going to get paid back in 10 years or 30 years, the purchasing power you're get paid back in is useless. So you give $10,000 today, the $10,000 you get back, sure, you're getting some yield or whatever. So the magical yield, but the $10,000 that you're getting back, it doesn't buy you what it did and buys a fraction of it.
There's that. And there's also the counterparty risk where you have to rely on the US government paying you back or whoever the corporate holder of that corporate issuer of that bond is. You have to rely on them paying you back. And how much is the money that they're going to, if they pay you back, how much is the money going to be devalued by? So why would you want to Why not just hold, let's say, 1 Bitcoin or 10 Bitcoin or 100 Bitcoin or 1,000 Bitcoin instead of holding a ton of bonds? Why wouldn't you just hold Bitcoin either in the ETF form? I mean, I know the ETF form it has counterparty risk as well, but I think the ETF form, it simplifies the process. You no longer need to do the analysis to see which companies can actually pay you back or not if you just hold on to Bitcoin. And I know the bond market is so key to lending. The U.S. government needs it to borrow. The Canadian government needs it to borrow, and that's where a lot of financing happens. But I mean, the way that I see it, maybe this is just completely
just spit it out.
Right?
You just spit it out. Just spit
the way that I see it, I don't see people wanting to have a 60-40 portfolio anymore. It doesn't happen that way anymore. If anything, they're replacing bonds with real estate. They're replacing bonds with REITs. So
sure.
Maybe he's right here. I mean, the entire world is going to grow with if you were looking at the total supply of money, it increased by about 4.5 times. Went from 900 trillion to 4,000 trillion there. Yeah. So 900 trillion to 4,000 trillion. So 4 quadrillion. I don't know. I feel like Bitcoin is going to be a bigger part of this.
Yeah, that's what I was curious. I wanted to hear what you were going to say there. Yeah.
So Bitcoin's up 280x here. I think it could easily take up a lot more. What would we need money for? I know. So the way that I see it, I think Michael Saylor he's a great person. He knows what he's talking about. He's done the research, but I feel like he's being a little nice. I think let me ask you a question. Why would a merchant want dollars when dollars are constantly?
Yeah, the only thing that you're right, because I'm with you. I'm thinking the same. Yeah, agreed with you. Yeah, sorry, I didn't mean to cut you off there. Yeah, when you say that, the only thing that came back in my mind when you initially said that was like, contracts are written in US dollars. Some of these contracts might exist for 20 years. So the dollar still exists because these contracts are written in US dollars. So like it might limp along. Maybe it loses value even faster than what we're showing on that chart that Michael Saylor showed. But like it still exists because these contracts are all written in US dollars. And to like just coming from a company like NetSuite with accounting software and stuff, like just the thought of trying to update global finance to have something else. Like maybe we just separate into, there is a currency globally accepted. US dollars become more and more of it as things like the Canadian dollars just lose value faster. And Bitcoin is like a reserve asset, both at the sovereign state level and at your personal life level, corporate level. It's on the balance sheets. And maybe we do operate in this weird two world state where it's just like this US thing exists still out there for much longer than maybe I originally had thought. I don't know.
Yeah. No, I think you're right. It'll take some time. It'll take time for people to, because it's so deeply ingrained in society. If you think about it, everybody believes that dollars have value, even though they're pieces of paper. They don't think that. The average person doesn't even see that the US dollar could go to zero. They don't see that the US dollar is just pieces of paper. No, go ahead.
Yeah, no, you've done such a good job of articulating this. I feel like online, like you're being pretty blunt about it, and I think you're getting people to think about it. What is the response been like when you're going online as blunt as you are on Twitter and just saying these statements where some financial advisors would just say like, this guy's nuts. There's no way, like they obviously haven't put in the work. What has the response been like? Like just from people engaging with you or other professionals? Like what have you had to deal with? Has it been all positive? I assume it's a mix. What have you gone through?
Yeah. Oh, actually, ever since I started posting about Bitcoin, I think I lost about 30,000 followers. So
no way.
I mean, that's part of it. But I mean, it's people don't, they're stuck with a certain way of thinking, and that's just the way that they want to think. They saw me as the guy who was posting about real estate, about stocks, and that's all they wanted in their feed.
So sorry, I don't know your history. So you built up a pretty good following talking about stocks, and okay, got it.
Yeah, I was already at about 60,000 followers by the time I started posting about Bitcoin. So it was already up there. On Instagram, I was at 120,000, 115,000 followers.
Oh, I didn't even know you. I don't go on Instagram, so I didn't know you were on Instagram. Oh God! Oh my gosh! Holy smokes!
But that's the thing; it dropped like crazy because I started posting about Bitcoin. People were offended, and a lot of the people who were leaving negative comments were financial advisors, right? Because, and if you think about it, it makes a lot of sense because if even realtors were a lot of there were. I
was just going to say, and realtors, the realtors were in there too.
Yeah, absolutely. And the reason for that is because they know that they can make money by selling a certain solution, and Bitcoin doesn't let them make money anymore. If they want to give that solution, like let's say for example, if I were your real estate agent and I were to tell you, hey, you should buy Bitcoin, don't buy real estate anymore. What's going to happen? I'm going to lose my paycheck. If I'm a financial advisor and I'm telling you, hey, you can take Bitcoin in self-custody, you don't even need the ETFs, you don't need to go through these finance firms, you don't even need me anymore. I lose my paycheck, right? And that's the perspective that most people have. I get it. Financial advisors.
I get it too, but to not live in integrity with yourself, it's just too painful. Like that's the thing. You have to, and it's a big world. I mean, we're a brokerage out here telling everybody you got to look into Bitcoin. You have to get some Bitcoin. Like, I just think there's a big world. The transition's not like overnight. When I hear you say that, when people are in the comments, either a financial planner or a realtor, what's kind of upsetting is that like I could see them maybe living paycheck to paycheck. They see you out there telling everybody to do Bitcoin, to buy Bitcoin and not do anything else. They get threatened by it, so they don't want to follow you anymore. And it's just another symptom of a world where this person, whatever age they are, 30, 35, 40, haven't been able to set aside any savings because of the money system the way it is, with inflation just ripping at them. And their response to you is, instead of taking some time to think about it and critically analyze, or even debate you back and forth with some arguments that it would be, let's say, valid in their mind, and go through that process, it's just like, oh my gosh, I need to survive. Block this guy. He's not worth it anymore. You know what I mean? Like the whole world is kind of broken on so many levels because the money system's broken. Sorry, I know I keep repeating the same thing, but it all boils down to that. Yeah, it really does. I think that's the incentive, right? I mean, if I were to buy a house, for example, I'm not a realtor anymore, but if I were to buy a house, I'd probably go through you because I know that you have integrity. You're not trying to push me into buying a real estate property because you understand how Bitcoin works. You're not telling me to buy a rental property when you know that Bitcoin is better. You understand how it works. You're giving people the knowledge that they need to understand how Bitcoin works and then to make their own decisions. But I think that's the thing that a lot of realtors, financial professionals have moved away from. Instead of giving guidance, they've turned into people who tell people what to do. And that's a problem to me. And I think that's a symptom, because inflation is ripping harder and faster and compounding. So then the response from the economic community is to pitch what you have harder and faster and stronger, because you need to make a buck to keep up with the inflation that's going, you know what I mean? So it's just this like this thing that like, I don't understand how we break out of this. And that's why I respect someone like Jeff Booth so much. You see what he's up to, and now he's not even on Twitter. He's on Nostr exclusively. And just to see how he has internalized this whole new thing, and he's living in himself on a Bitcoin standard, like currently just the way he's living, is kind of cool to see, kind of setting the precedent for more of us. You know, so you can see there's some early adopters who are choosing to look at the system and say, see ya.
I think these people are gonna be known for a very, very long time. Like Saifedean is gonna be known for a very long time for what he did. I think Saifedean changed the world. I think Jeff Booth changed the world with his book. I think those two books are huge. They're so well written. Even the book behind me, I'm not sure if you guys know about it, The Internet of Money. It's by Andreas Antonopoulos. It
was one of the first books when I went down the rabbit hole during the pandemic. I think he has like 3 or 4 colored books, like yellow, purple, blue. I bought them all. Just started. I'm like, what is this thing? What is this Bitcoin thing?
I have all 3. I think that one's volume 3. There's a blue one.
Okay, was it 3? Okay, I just remember colors. Okay,
they're all great. There's a blue one and there's a purple one. Your memory is right. But I think over time these books are going to change so much of the world. They're going to teach so many people about how this thing works, and they're going to be known forever. Right? That's and it's the people on the other side. Oh no, go ahead.
No, you go.
Oh, I was going to say people on the other side. They're going to be known as on the opposite side, right? Like, do you know who Peter Schiff is?
Of course. I'm an old gold guy. How could I not know Peter Schiff? Yeah.
Peter Schiff, he has 1 million followers on Twitter, and he's constantly telling people not to buy Bitcoin. So what are they losing out on here, right? How much have they lost because of him? I think he started talking about Bitcoin negatively back when it was $1. So somebody who could have spent $1 to buy Bitcoin has lost out on $72,000 US.
Jeez.
Right?
Sometimes I think about it. I'm like, we started this business and I quit my job in 2007. We started incorporated, 2008. Long story. I was at a Keller Williams, that brokerage in Oakville. The first one kind of went out of business. They relaunched later and so forth. And we had to go find a new home and stuff, and renting U-Haul trucks. We had like 2 desks and a voice over IP phone. Like our business was much smaller back then, and like just trying to survive. And then obviously Bitcoin was born in 2009. And like I was so heads down growing this business. There's no way, like I saw mention of it, like, but I just was too busy. Sometimes I think, wow, if I had really just paid attention to Bitcoin back when it came out, I really wouldn't have had to go through any of the stuff I went through in the last 15 years.
Yeah. But then that's the thing, right? I mean, it's not about getting in. I mean, you're still early.
Sure. No, agreed. I'm just having fun with the thought. Yeah. I don't have too much regret. Yeah.
I get exactly what you mean, but I feel like maybe the experiences that you went to, the experiences that you went through gave Bitcoin so much more value to you. Right. So
absolutely.
You saw it from a different perspective because of everything that you went through. Like for me, for example, if I hadn't gone through the finance industry, if I had just learned about Bitcoin in 2009 and started buying, I would have been a completely different person. I would have thought, oh, these people are idiots for not understanding Bitcoin. But now, because of my finance background, I understand why they don't understand Bitcoin. And that's what kind of pushes me to teach them. And I think you're in the exact same spot there. You have that background. You've struggled to put together a great business, and you've put in the time and the effort to get to that point. And now you're helping other people to get to the same point as you. You're helping people with building their own wealth. Now you've pivoted to Bitcoin because you realize that this is a better solution for people's problems. So
it's the apex. And it's funny when you said people attacking you or attacking you or whatever, not following you online. We hold events, and we have about 1,000 people out at a time, and for our clients, and we give an economic update and stuff. And I used to have like these 3 buckets where I would always say, you want some liquid fiat dollars for emergencies and deflation. Like you need this bucket, even if it's access to a credit line or whatever. You just you need to live, like you need this bucket. You need this other bucket where you have some productive assets of some sort. And for us, that was small business and medium-sized business and real estate. Like that's that bucket for us, where you kind of got like this cash flow component. And then you have your longer term savings that you don't need for operating your life or your business, and you save that in gold. And that was always like our 3 buckets. And then in 2020, I started replacing the gold. And I'm like, well, by the way, there's a gold thing, but then there's this like Bitcoin thing. And I put up like this picture of the Bitcoin Standard, the book. We even did a breakout session at one of these 1,000-person events right after the pandemic was over and we could hold in-person events again, where we were teaching everybody the history of money using Saifedean's book. And I was doing a book report as a PowerPoint presentation. So I just took his book and I was just teaching everybody this, and like everybody was loving it. And it was interesting. But on this last event that we just did a few weeks ago, some gentleman pulled me aside. He was there with his daughter, and he said, listen, you got to stop talking about Bitcoin. I'm here for the real estate. Real estate has a proven track record. I like you because of the real estate. You're losing credibility with me because you're talking about Bitcoin. And I explained to the guy, I said, listen, I need to stay in integrity and share with you what I think is the best information to be able to help you live your life on your terms. That's ultimately what we're about. Real estate has been a vehicle to help us there. And now Bitcoin can be a real great vehicle to help us get there. So just keep an open mind and you decide for yourself if it's right for you, but don't dismiss it outright. And you could see him, he just wasn't open to it yet. And I was just trying my best to get him to open his eyes a little bit. But I'm curious, online, we talked about the negative people with the people who blocked you, whatever, but there must be some positive coming your way too, where some people are thanking you for opening their eyes. What has that been like?
Tons of positivity. There's a lot of people on the other side who are saying, oh, I hadn't understood about, I hadn't even thought about looking into Bitcoin before I saw your content. A lot of people talking about that, and that makes sense. But there's like I said, there's a lot of negative, there's a lot of positive, there's people on both extremes. But I'm so happy that there are a lot of people that actually took my content and they started using it to their own advantage. I think I've been posting about Bitcoin since it was around $17,000. I just had posts here and there, but then more recently, I think
you picked a great time. You picked a great time. Yeah.
And then I started posting more when it was at about 30,000 before the ETFs were approved. So because that's when I really got it. That's when I really understood it. So.
Oh, cool. Okay. Wow. So you've gone all in pretty. We had Jeff Booth actually speak. Too bad I didn't know you then. He actually came out and spoke to our real estate event. Can you imagine?
Oh, he did.
Jeff
wow.
Booth, yeah, he spoke live. Yeah. We had Jeff Booth at a real estate event speaking there. It was amazing. For me, it was like a huge accomplishment, right? Like it was very satisfying for me to have Jeff out there, and he was kind enough, such a great guy, like always so willing to share. Like, he flew out to do that. So that was
that's awesome.
Yeah, that was really cool. I want to ask you, what about your family and friends? Like, do you have family? Were you born? Where were you born? Were you born in Canada? Were you born outside
Canada?
You're born in Canada. Family in Canada?
Yeah.
So how's your family and friends circle? How are they reacting to this? I'm curious. So
first of all, they don't. Most South Asian people, they don't do the entrepreneurship route. Mm-hmm. They stick to the career, the 9 to 5. My wife is a nurse. She's doing that. I mean, even that is like they would rather have you work a safe job over doing the entrepreneur. So that part just differentiates me from the rest of the people. But other than that, I don't think they're really opening their eyes to it yet. My dad is getting into it. I got my dad to start buying some of the ETFs because he's not into the cold storage yet. I'm going to get him to get into that. But I bought a little bit for my mother-in-law. I got my brother-in-law, my sister-in-laws, both my sisters-in-laws to start buying Bitcoin. I just bought it for them. They gave me they said to me, oh, we have this money in our account. One of my sister-in-laws, she said to me, I have this money in my account and I need to put it into something. And I said, give me your phone. I'm going to buy Bitcoin for you right now. And I bought it for her. So she's up big now, right? I bought it for her back when Bitcoin was at like 54K Canadian. Now she's up double and she's so happy. So.
Yeah, cool. Okay, and then so how have you educated yourself on the technical aspects, and what technical aspects of Bitcoin should people pay attention to? I recently saw you talking about UTXOs. Yeah. So this is all self-taught? Like, do you feel that's something people should begin to understand once they dive into the Bitcoin rabbit hole? Can you talk about what they are maybe, or why you're paying attention to that?
Yeah, absolutely. So what UTXOs are is basically, actually, let me share my screen. I'm going to share my screen. I'm going to show you something here. I think this is the easiest way to show it. Mempool. So there's a site called mempool.space. Let me see if I can. Oh yeah, there you go. I can see it.
Yeah. Well, you know what? We're new to using StreamYard here. I don't even know if you have permission to share your screen on your side. Do you?
Maybe I have it.
Yeah. Awesome. Oh, here. Yeah, and then maybe, do I have to move it to the stage? There we go.
Oh, okay. Perfect. Is it there?
Yep. It's there. Yeah. Do you see it okay? Because you're looking at your screen. Yeah, no, we see it. We see it. Yes.
I'll zoom in a little bit. Okay. So a UTXO is basically just a chunk of Bitcoin. So we can see that here. This is a UTXO right here.
Yeah.
This is a chunk of Bitcoin. So what a UTXO is basically like if you had $100 bill versus 400 quarters. So a UTXO, each UTXO is an individual chunk of Bitcoin. And how the Bitcoin network works is basically it moves these chunks of Bitcoin from address to address. And each chunk of Bitcoin takes up a certain amount of space. So in this case, we have, if we go to this address here, we can see here, there was a UTXO for 176,000 Satoshis, which is 0.00, we can say 0.00176068 Bitcoin. But what you can do is with Bitcoin, each coin doesn't move on its own. It's not like if you have a $100 bill, you can spend. If you have a $100 bill, you can spend the $100 bill, right? This is separate from anything else. If you want to move this $100 bill, then it doesn't. You don't have to pay a higher fee if you had to, instead of a $100 bill, if you had to pay with $10 bills. But in the terms of Bitcoin, you have these chunks of Bitcoin that if you want to move them, each one costs you a certain amount of money. So let's say in this case, we have this one chunk of Bitcoin that cost $14 to move. There's a fee rate here. I actually put up a video just explaining this in depth.
Oh, cool.
Some other guy.
Awesome. So this is on your YouTube channel.
It's on YouTube. And it's on Twitter. But essentially what it is all you're doing when you manage your UTXOs, we can see that here. So this person has a bunch of UTXOs. All of these is one UTXO. You can see that here. So all these tiny bits of Bitcoin, 0.019, 0.015, 0.046. All of these are UTXOs. So to move each of these chunks of Bitcoin, it costs you a certain amount of money. And if you have more of these chunks of Bitcoin, then it costs you more money to move your Bitcoin. So let's say in the case of this transaction, it cost them $57.53.
Yeah, wow.
With 35 point. That was their cost. But in the case of this one only has one UTXO. We can see here. This one has like 20 UTXOs. If I zoom out, you can see how many UTXOs there are here. A UTXO is an unspent transaction output. I think I should have started with that. But each one of these is a UTXO. It costs them $57 to move all of these UTXOs into this address. In this case, it only cost them $3.63 because they only had one UTXO. So with Bitcoin, it's not about how much Bitcoin you move. It's about how much space you take up in the network. So if we go all the way up here, we can see here that each one of these is a block of transactions. I may be going a little bit too technical here, but each one of these is a block.
No,
of
it's good. Even if someone can't follow along, it's good for everyone to hear these concepts because they can explore them later. So keep going.
Yeah,
it's great.
Perfect.
It's great.
So each one of these blocks can only take up a maximum of 4 megabytes. So it can be a maximum of 4 megabytes. And each UTXO, so this is a UTXO, each UTXO takes up a certain amount of space. So if we go back to mempool.space, we can see here, the transaction fees are based on how much data you're sending. So we see here 4 sats per VByte. A VByte is a virtual byte. So let's say if we go back to this block here, we can see here that if we go to this transaction, we can see how many, if we go back to this transaction, we can see how many VBytes it is. Or no, sorry, I clicked the wrong one there. Clicked the wrong one. If we go to this one, we can see how many VBytes this transaction is. We can see here 191 bytes. 191 VBytes. So this transaction took up a much smaller amount of space versus something that I'll find that other one that had the, oh, there you go. So if we go to this one, we're going to see that it's much bigger. So we can see here 4.2 kilobytes. So this is, 20 times more? 20 times more than the other one?
Paying for your usage of the space in each block that's created.
That's exactly what it is. So this person, what this person did was very likely they just combined these UTXOs into one address. Or maybe they sent the Bitcoin to someone and they just combined all the UTXOs and they made them one big UTXO. So they went from multiple small chunks of Bitcoin to one big chunk of Bitcoin.
So if somebody was buying if somebody was dollar cost averaging every month or every week $20 worth of Bitcoin, they might start accumulating bits of Bitcoin. Even in that $20, it might not be one UTXO. Would that be appropriate to say? Like if you're acquiring $20, you might be getting chunks of Bitcoin from elsewhere that are adding up to $20 worth on that day. Would that be accurate?
So how it works is when you buy Bitcoin from an exchange, they're not giving you UTXOs. They're just updating it on their end. So it's like if you had a bank account, right?
Well, let's say I'm buying it and it's sending it to my wallet.
Oh yes, if you're buying it and you're taking if you're taking it into your own wallet, then you're getting UTXOs. But if you just leave it on the exchange, let's say you buy $20 worth every single day, and then once you reach 0.01 Bitcoin, you withdraw. In that case, you'd only have one UTXO,
which is nice. Got it.
Yeah, that's exactly.
But if you did that over time, you would have maybe 20 of these 0.01 pieces of Bitcoin, and then you might want to consolidate them into one new UTXO that holds all of it. So I guess the way I'm just trying to think of the simplest way would probably be just UTXOs are chunks or pieces of Bitcoin.
Let's think of it this way. So if you have like bits of gold and then you melt them down and you turn them into 1 bar of gold. That's essentially what they're doing.
Yeah,
so there's a cost to melting them down and then turning them into that bar of gold.
Mm-hmm.
That's exactly what it is with Bitcoin. So,
and for anyone listening to this, you don't have to go into this depth of technical stuff, but it is kind of fun once you do. Like, I guess maybe I'm a bit of a geek, so I like it.
No, it's very fun. Yeah.
So figure out how all this stuff works. Okay. So without taking too much of your time, because I know it sounds like you could talk about that much more, which is fantastic. Do you recommend for anyone who's like, hey, what would be a good hardware wallet? Like I've graduated now, like I've been buying some Bitcoin on an exchange, but I do want to take custody. Is there like a hardware wallet that you like or recommend, or what do you tell people to do? Do you have like a standard answer for that?
Yeah, I'm honestly not. I'm not an expert with wallets. I don't understand all the nuances. There may be issues here, issues there. But I personally like the Trezor and I like the Cold Card. The Cold Card I like because it's air gapped. So what that means is it never connects to the internet. So you don't have to connect it to your computer. You can actually use micro SD cards to confirm and to send transactions. So you use a micro SD card, you put it in the Cold Card device, you take it out, and then you connect it to your computer. So that's what air gapping is. Essentially, it's never connected to the internet. It's always disconnected. It's always completely offline. That wallet is air gapped, but then the Trezor, you have to actually connect it to your phone or your computer. You have to connect it with a cable. So to some people, that leads to a little bit of paranoia where somebody might be able to take my seed. Somebody may be able to take my seed phrase and take my Bitcoin. But with cold card, that's not possible. So I don't know the exact nuances. I would recommend doing your own research, but those are the wallets that I personally like.
Yeah, cool. So Rajat, as we go through this, like I'm just getting to, so thank you again for doing this because you didn't know us, like you're taking, a bit of a risk for you to do this with us. So thank you for doing this.
No worries.
As we begin, just to wrap up, what going forward, like what do you want people to know about you? Like what is it that you're up to online if they see you on Instagram? Now that I know you're on Instagram or on Twitter or everything that you're doing, what do you want people to know about you? What are you trying to accomplish? What do you stand for? What is it that you want to be known for?
So I don't really post on Instagram anymore. I post more on YouTube. I post regularly on YouTube. I try to post a video a day.
Oh wow, really?
Yeah, I try to teach the basics. I try to keep these videos as polished as possible. So if anybody does want to find my content, just search for my name on YouTube. You'll find me. Twitter as well. Twitter, I talk a lot. I like to post constantly. Now I'm seeing you. I guess because I've looked at your posts. Now your posts are, the algorithm's figuring out. Like, I should show Tom these posts. So yeah, and on Twitter, you're Rajat Sony Finance, all one word on Twitter. There's no I in the finance on Twitter.
Oh, is there not? Oh my gosh, I even wrote down an I. Holy smokes. Okay, thank you. You know what? We'll put a link directly to your Twitter handle as well. Yeah, I see that. Okay, so Rajat Sony Finance.
On YouTube, if you search Rajat Sony Finance with the I in finance, then you find me.
Okay. So we'll have links both to your YouTube channel and to your Twitter handle in the notes for this particular episode. And I had more stuff. I'm personally running out of time, so I apologize, but I do want to kind of wrap up just with this question and keep it in the Bitcoin theme. What do you think history is going to say of Michael Saylor?
Genius. The way that he's doing it, I made a video about him. I did a deep dive on what he's doing. He has like this massive playbook that he's running. He's basically just borrowing US dollars and buying Bitcoin. That's it. That's all he's doing. He's borrowing US dollars, buying Bitcoin. And people are willing to give him US dollars because what he's doing is he's incentivizing them with convertible debt. So at a point, if MicroStrategy's stock just runs, they don't even get paid back in US dollars. They get MicroStrategy shares. So these investors are fully willing to give him US dollars so he can buy Bitcoin on their behalf. And because of that, MicroStrategy's price is going up, Bitcoin's price is going up, everybody's benefiting except people who don't hold Bitcoin. So I think people are going to either really, really hate him for owning too much Bitcoin. That's going to be one side. But then the other side of it is going to be he's a genius because he figured it out before everybody and he actually put it into action. That's the key here.
I feel like we could be staring at the future richest man in the world by far, who called his own shots every step of the way and had people dismiss him every step of the way.
And the thing is that he's telling people what he's doing, but they're still not doing it.
Did you watch the video of him? Do you know he wrote that book, Mobile Wave? I don't know how much you've looked into Michael Saylor.
I haven't, no.
Okay, so Michael Saylor. Okay, so like when I was at Oracle, we would sell business intelligence software. MicroStrategy sells business intelligence software. Like they've been around forever. Yeah. And then he wrote a book called The Mobile Wave, which was predicting that enterprise software and software in general was going to move from the desktop onto mobile devices. Mm-hmm. He wrote the book on this, but he didn't participate in it. He said the royalties he got from the book were rather meaningless overall. And that when he discovered Bitcoin, he wasn't going to write the book on it anymore. He was just going to take action and be a part of it. Yeah. So I thought this is somebody who's identified trend. Like obviously got into tech. He's the longest serving tech CEO. He got out of a public company. He got into tech, survived that whole game, called the mobile wave, now calling his own shot here. Like we're watching somebody with an incredible track record. Like I feel like it's a fantastic point in history. But anyway, Rajat, thank you so much for this. We'll put the links out there. Keep doing what you're doing. Pleasure to get to know you better. And we'll have you back soon. We'll talk some more.
I appreciate you having me on here, Tom. I enjoyed this conversation a lot. So.
Thanks, Rajat.
We'll do this again.